I made over $17,000 in just one single trade that I did on gold. And in this video today, I'm gonna give you the exact trading strategy that I used to make $17,000 trading gold on the 5-minute time frame. And I please want you to do one thing. Watch this video until the end because this is the video that may change your trading forever. And if you are new to the channel, do not forget to hit the subscribe button and turn on the notification bell. That was the trade that I did on gold for the buy side where I made $17,000. The entry was taken from this level, and when you look at the chart you can see it's very simple as I am not using any sort of indicator. I prefer to only use price action because price action is the king. Now many traders, why they never make profits in the market is because they always overcomplicate trading. But in reality, trading is very simple. You have to keep everything simple and do not draw trend lines, add multiple indicators and make your chart look very difficult to understand. I prefer to keep everything simple the way it is right now. And I just use simple price action. Now what I do every single day, when I start looking for the trade opportunity in the market, I start my analysis from the 1 hour time frame. And on the 1 hour time frame, I find the overall market direction. And the way I do that is I look for the trend. If the market is making higher high and high low sequence, that means market is moving up. And every time when it is making higher high and high low sequence, there needs to be some sort of a break of structure. Just like the way market broke this resistance right there, which was also acting as a higher high and buyers went up. I always prefer to see these type of market structure break, which confirms that yes, market is either going for the upside in case of buyers or market is going for the downside in case of sellers. So sellers will be market is making a lower low, pulling back, then breaking the previous structure, which was this spot level or lower low, and then pulling back and then resuming its trend to the downside. Now, other than these two market conditions, market most of the time stays in a range, which is 80% of the time. And during this 80% of the time, what I prefer to do, even market is staying in the range, I look for the miniature level of uptrend. Let's just say in this range, we have the high of range here, and then we have the low of range here. Now on the smaller time frame, what we can do, once market moves from here and it starts to go up, we can look for the potential break of market structure on the smaller time frame, and we can look for the trade from the smaller time frame and target the highs of the range. That's what I like to do when market stays in range. However, if the higher time frame like 1 hour time frame is simply just making higher high high low sequence, then I look for the pullback and I trade those pullbacks. So that's the simple price action that I use. Now I'm going to show you the exact trade that I did. What were the reasons which made me decide that I am going to be executing buy on gold from the 5-minute time frame. Once I did my analysis on the 1 hour time frame, then I went down to 15-minute time frame, and then I executed the trade from 5-minute time frame, and I made over $17,000 in just one single trade. So that's the market structure on the 1 hour time frame. Now looking at the very recent move, we can definitely have an idea that market is making a higher high and higher low. That means market is going for the buy. So right after we broke this market structure, there was a pullback that happened, which I will show you in a bit what kind of a pullback structure on the 15-minute time frame that I prefer. And whenever market gives me such structure in the pullback, I go down to 5-minute time frame to execute the trade. Now when market was making a high 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 low sequence, yes, on the 1 hour time frame, the very recent move is telling me it's going for the upside. The problem was there was this small range here that market very recently have created. We can definitely have an idea that market started to basically move in this range. Now it's not that big of a range, however, that is a range. And previously market was also in a higher high and higher low trend. So the very recent move was also for the buy side, and the overall previous move was also for the buy side, with the one problem that after it created this big higher high, it just went into range before it broke it. Now when it went into a range, I knew yes, we are in the range. I told you earlier that market stays more than 80% of the time inside the range, and there is a way to trade the ranges as well. So what I did in this range, I just looked for the recent market movement that happened, and it was telling me market broke this higher high right here, and it ended up creating a new higher high, which was by just looking at this move was definitely a new higher high. However, there was this previous resistance or the previous high from where we started to get a rejection and sellers made a pullback. So considering that, I knew if I'm going to be taking the trade my target is maximum going to be this level from where we started to have the rejections and sellers are coming down. So what I did, when market broke the structure, we were here when I saw it for the very first time. I went down to 15-minute time frame, and on the 15-minute time frame, this was the market structure. We just have this new higher high and sellers, they have started to come. Now what I want from the market every single time, I want after it breaks the structure, it creates a higher high in case of an uptrend. I want sellers to come to retest the resistance or the previous higher high which market just broke, and I want it to come in one pattern that I'm going to show you. So every time market, if it's going to make a movement to the upside, it needs to be a significant move. That means there is some sort of a resistance, and when buyers are going to take control, they need to go very strong. That's the momentum that I prefer to see in the buyer's movement in case of an uptrend. Now from the higher high level, if the sellers start to make a pullback and we are expecting them to come to this resistance or the previous high which they just broke, I want structure like this. I want sellers to make a movement, buyers to come up. Sellers to make a movement, buyers to come up. Sellers to make a movement, buyers to come up, and right after they reach the resistance level, I need multiple rejections, and then and only then I look for the trade. Now what you will see that when on the higher time frame market was making a move, it was making higher high, higher low sequence. This is the higher low, that's the new higher high. Now similarly, when market is gonna make a pullback on the miniature level, which means on the 1 hour we needed this type of structure, but on the 15-minute time frame, the time frame where basically we are gauging the momentum of the pullback, we are waiting for the pullback, we should be expecting the sellers to make lower low and lower high sequence. However, this lower low and lower high sequence is going to be the miniature level of lower low and lower high. What do I mean by that is, overall we are going to be staying in the higher high and higher low sequence perspective. We are going to be taking the buy. But on the smaller time frame, we want retail traders to think that sellers trend have started and we are no longer in the uptrend. We are no longer going for the upside. One more reason why I want market to always make this type of miniature level of lower low and lower high sequence, because we are just getting a rejection from the previous high that was the high of the range as well. So retail traders, they are thinking that market is gonna come and it's gonna come to the downside of the range, to the low of the range, and they're gonna be literally taking the sell positions whenever market is gonna be making a lower low and lower high. So they will be entering again and again, and they're gonna be targeting the low of the range until buyers will take them all out. That's also considered a liquidity hunt, and I prefer to call it an illusion. You know, when the retail traders are looking for sell and the big players, the big banks, they are waiting for them to turn into sell so they can take out all the positions and they start buying. That's called illusion. Now that's the market structure I prefer to have every single time when I look for the trade opportunities. Now here, that's the higher high, and sellers, they just have started to make a pullback. So what I want, we want market to come like this, creates a miniature level of lower low and lower high sequence, starts to get a rejection, and then buyers to take control. Now let's wait and see how market will come to retest this resistance which buyers very recently broke. So sellers are definitely coming down, and buyers, they are also coming up. That's what we need. Sellers to come down, then buyers to go up, and then sellers to come down again. So now we can have an idea that that was the low which we just broke on the 15-minute time frame. That's the lower high right here. Market is creating a new lower low, and right after it created a new lower low, what we are looking for? We are looking for multiple rejections. So that's the lower low, and that's a new lower high right here. So market is definitely creating a lower low and lower high sequence. Now the second it reached this resistance area from where buyers broke this and created a new higher high, look at the multiple rejections that have started to happen. The first rejection is right there, followed by the second rejection right here, followed by the third rejection right here. 3 rejections have already happened. Now many traders, they will be making one mistake here. If they are looking to take buy positions, they are just randomly gonna enter right after they will see multiple rejections, and they will put their stops here and target at the recent high which was there. Now that's a good way to take the trade, but there is one thing that's still missing, and I call it the execution. So there are always 3 stages in the pullback: confusion, confirmation, and execution. Now confusion is basically when market is making a pullback and it creates the lower low for the very first time inside the buy trend, and then it creates a lower high. That's confusion because of the reason that retail traders were thinking that it's going to be a buy. Instead, it turns out to be a sell, but on the smaller time frame, which is 15 minutes in our case. So that was the first part, confusion. Then confirmation comes when the average trader, he starts looking at this lower low, lower high and lower low, lower high sequence. He thinks after the second movement when it made this lower low and then the lower high, they start to get the confirmation that market is no longer in the buy. Instead, it turned into the sell. And right after it's gonna break the previous low again, which is the third stage, that's where all the execution starts to happen. Traders, they start to literally sell from this break of structure on the smaller time frame, in our example on the 15-minute time frame, and they start selling because they do not want to miss this trade. Now after the execution, what the institutions do, they just take the bias to the upside, take out all the sell positions, and then go up. So far we have this lower low, then lower high happened. That's the confusion part. Then this confirmation that market is no longer in the buy trend. Instead, it just turned into lower low and lower high sequence. So after this lower high, because market already made this lower low, so after this lower high, retail traders are now turned into the other side. They have got the confirmation that we are in the lower low and lower high sequence. So even the portion of traders who are buying from here, right after the move will happen, which will be the execution, everyone will turn into sell. And these buyers, their stops are gonna get hunted. And when all the world will start looking to sell, institution traders will come in, they will start buying, and then buyers will make their movement to the upside towards at least this recent high. So these three stages, I prefer to look in the pullback. And so far we have two stages. So what we need the execution part. So let's see if market is gonna take out all the positions or not and turn people into sell. Then after that, buyers will take control. So now what's really happening, that these sellers, they are going lower than the rejections, and right after they broke it, traders have started to think that it's no longer a buy and instead it's definitely a sell. So everyone is now selling. So what's gonna happen right after these type of movement? So buyers are always gonna come back in, because now is the time when big players are stepping in and they have started to take the buy positions. So at this point, I just wait to check if we get any sort of higher low, which we just got. As market was making lower low and lower high sequence, even right here, right after we have this equal lower high, market just gave us this high low, and you saw that I took the position from here, I put my stops here, and I placed my target at the very recent high, which was right here. Now my target was little bit above that because I was expecting that market will simply just go up, because of the reason that there was this supply level from where these big sellers, they made the movement just from this price, and it hasn't been tested yet. So that's the reason I put my take profit right here, and I was expecting the market to basically test this level of supply, and when it did, I ended up closing my trade. So this is how trade came in and it started to play out, and this trade gave me more than 2.7 rewards, which made me $17,000 on my account. So that's my trading strategy that I just revealed. This is how I trade on my account every single day. If you got any value out of this video, you know what to do. Consider leaving a like, and do not forget to subscribe and turn on the notification bell. Thank you so much for watching until the end. I hope that this was the video that you were looking for, because that's the simplest trading strategy that you can ever learn without any indicators, without any nonsense. I just look for the simple price action. I look for the break of market structure. I go down to 15-minute time frame to wait for the pullback, and then on the 5-minute time frame, I look for the trade whenever market gives me the high high and high low sequence after all the rejections, after all the confirmation, execution, 3 stages of pullback. I simply just execute my trade on the 5-minute time frame, but all my analysis, they are done on the 15-minute and 1-hour time frame. So that's it from this video, guys. Thank you so much for watching again. See you in the next video. Bye for now.